we'll go over the IRS Interactive Tax Assistant tool designed to help taxpayers determine whether or not they are eligible to claim an education credit when they file their income tax return. So for most people can be eligible if they meet certain criteria to claim one of two types of education-related credits. The first is the American Opportunity Tax Credit, and the second is the Lifetime Learning Credit. So we go into much more detail about those tax credits in our instructional on IRS Form 8863, which is the tax form that you use to file those credits. So we'll put links to that article in the video in the show notes at the end of this video. Right now we're going to focus on walking through this tax tool. So the information that you're going to need is your tax filing status, married, filing jointly, married filing separately, head of household, single, qualifying, widow or widower, the student's enrollment status, whether or not they're full-time, part-time, adjusted gross income, who paid the expenses, when the expenses were paid, and for which academic period. So you need records that reflect that. You need to know whether or not any of those expenses were paid with tax-exempt funds and whether or not they were paid with distributions from either a Coverdell Education Savings Account or a qualified tuition program, also known as a 529 plan. So this tax tool estimates that it should take about 10 minutes. We'll see where we are at that point. Let's go ahead and begin. So as most of you know, these tax tools are available for a period for 3 different tax years. At the time of this recording, we're in the middle of the 2023 tax year, actually towards the end of it. So the most recent version of this form we're able to access is the 2022 tax year. So the first question you'll answer is what your tax filing status is. Let's pretend that we're paying college expenses on behalf of one of our children that's gone off to college. So we're a married couple and we are not claimed as a dependent. The student is a dependent that we're claiming on our tax return. Now, are you or your spouse being claimed? No. Was the student enrolled at a post-secondary educational institution that's eligible to participate in a student aid program? So anytime you see this blue highlighted font, you can click on it to get more information, in which case IRS Publication 970, Tax Benefits for Education, states that an eligible educational institution is any college, university, vocational school, or post-secondary educational institution that's eligible to participate in student aid administered by the U.S. Department of Education. This is virtually all accredited public, non-profit, and proprietary, otherwise known as privately owned for-profit secondary institutions. So most colleges are going to accept this. Trade schools, vocational schools, things of that nature. So that is kind of a big red flag. You should make sure that your educational institution meets that requirement. So for at least one academic period, was the student enrolled at least half-time in a program that leads to a certificate, a degree, or some other credential. So academic period includes a semester, trimester, quarter, summer school session. If there's an educational institution that uses credit hours or clock hours but does not have academic terms, then you would consider each payment as a separate academic period. So being enrolled at least half-time meets that requirement. Were they enrolled in one or more courses? Yes. Were the educational expenses paid during the year? And were they, if there were any educational expenses paid for a period that began during the tax year or the first 3 months of the following year. So like for the spring semester. Who paid the expenses? You and your spouse. Which portion was paid with tax exempt funds? So this could be Pell Grants, this could be like the GI bit, like the Montgomery or either the Montgomery or the post 9/11 GI Bill, tax-free scholarships, tax-free payments, employer-provided assistance. So let's just say none of this was paid with tax-exempt funds. Did you receive a refund for any previously paid expenses? Was a distribution from either a covered out ESA or a 529 plan? So if you select the qualified tuition, that's the definition as the IRS states. It's a program that allows you to prepay or contribute to an account established for paying. So anything like a 529 plan, prepaid tuition plan, the IRS calls those qualified tuition programs. Are you claiming these education expenses anywhere else on your tax return? Does the student have a valid Social Security number? So for the American Opportunity Credit, a valid Social Security number has to be issued to the person that you're claiming the credit for. And then you also have to have a valid Social Security number. Did you have any portion of the tax credit previously disallowed for any reason other than a math or a clerical error? We'll fix this one in just a moment, but we're going to go through the normal scenario just to see what this says. Has the HOPE or the American Opportunity Credit been claimed for the student for 4 previous tax years? So the American Opportunity Credit can only be claimed for the first 4 years of post-high school education. At the end of the 2022, does the student have a felony conviction for possessing or distributing a controlled substance? So one of the little known requirements of the American Opportunity Tax Credit is that the student cannot have a felony conviction for any drug or alcohol related convictions. Was the course part of a post-secondary degree program or taken by the student to acquire or improve job skills? Do you know your AGI? So let's just say our AGI is $80,000. Are you claiming the foreign earned income exclusion or excluding income from Puerto Rico or American Samoa because those taxpayers do experience some limitations? We'll say no for this. We did receive a Form 1098. We do have valid tax identification numbers. So you can claim qualified expenses related to this on the American Opportunity Credit side. You would be able to claim up to 40% of the American Opportunity Credit as a refundable credit, which means even if your tax liability were reduced to 0, the refundable portion could actually reduce your tax liability to a negative number, meaning that you would get a tax refund even if you did not pay tax. So the lifetime learning credit, you can also claim that, but you can't claim that at the same time. Your credit can be limited by your tax bill and other non-refundable credits. So to claim that, you would file IRS Form 8863, which is the education credits tax form, and you would attach that to your income tax return. So I want to go back and change a couple of these answers, and let's see what happens when we do that. So let's change the foreign earned income exclusion and leave everything else the same. Let's just say we excluded $5,000. So you can claim the American Opportunity Tax Credit. You can claim the Lifetime Learning Credit. Let's see if that changes because we changed the amount. So technically not. As long as their adjusted gross income still remains where it was. There is one other thing I wanted to go back and check. So let's see. Oh, so let's imagine that you've previously tried and the IRS disallowed your credit for some reason other than a math or a clerical error. So was your credit disallowed for 2 years due to the reckless or intentional disregard of American Opportunity Credit rules? Well, let's say yes. Did you submit IRS Form 8862, which is the tax form that people may need to file to claim certain refundable credits after they were disallowed? So let's say, yes, we did. Now it picks up with the regular decision tree, and it looks like we would probably be on track to be able to claim that credit. So if you've had a refundable tax credit that was disallowed because you previously had the IRS make a determination that you did not just make a simple mistake, that you tried to claim a credit that you were not entitled to. The IRS actually punishes certain taxpayers if they go too far. It's not quite like on the criminal side. They will just ban certain taxpayers from making certain claims for a tax credit for a certain period of time. So generally speaking, there's a cooling off period depending on what the IRS determination is. So let's go back one last time. Let's see what would happen if it hasn't been at least 2 years. So you wouldn't be able to take the credit for 2 years on the American Opportunity side because it was a refundable credit. You could claim the lifetime learning credit. So I just want to do one more thing back here. So if you didn't submit IRS Form 8862, what would happen? So because I said yes, it's been 2 years since the final determination was made. If it has not, then you would not be able to take the American Opportunity Credit. You could still claim the lifetime learning credit. So even if you did not file IRS Form 8862. So I'm going to put links to all of those tax forms, articles, and videos that we've produced for them in the show notes. But I wanted to go through this last portion. As I normally tell people, whatever decision tree you go through, as you can see, this video has a lot of questions. So what you want to do before you actually make any decisions on your tax return, if you're going to do this by yourself, what I would suggest is print this form out and go through each of these questions with a fine-tooth comb. Maybe you selected yes for something that you should have said no to. Maybe you misread a question, but this is going to give you the opportunity to go through all of these to make sure that you answered each question the way you wanted to. And if not, then you simply go back and put in the answer that you want. So you can either do this kind of to figure out where things should go, or maybe a decision that's upcoming. You can kind of walk through that, although I would personally think walking through the tax form instructions or the relevant publication might be easier. However, if it's just one or two simple decisions, you could probably troubleshoot that and see. But once you get a final determination, you may want to print this off and then stick it with your tax return. So you can hit the print button, and if you're audited because of some discrepancy between your tax return and what was reported, at least this would show as partial evidence that you were trying to do the right thing, that you were doing what you thought was due diligence, and maybe you made a mistake along the line. So when the IRS takes a look at your tax situation, they do take into consideration whether or not it appears you made an effort to keep records, and if you're able to refer to records while you're in the middle of your examination, that's going to be a lot better for you than if you just have a tax return, you don't know where the numbers came from, you got a shoebox, you did your tax returns yourself, and you just kind of threw it up there and decided to hope for the best. So you can't actually get hit with accuracy related penalties or negligence. You can, in the case of certain refundable tax credits, you can be barred from claiming those in a future year, even if you're eligible for a tax credit in that year. So please be careful. And like I said, I'll put links to all the articles that we've written on some of these forms mentioned in the video. They'll be in the show notes. You can read any of these articles on your own directly. Simply go to teachmepersonalfinance.com. If you're looking for an article on a specific tax form, write in this tax form in the search bar, and you should see the article appear. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions about any of the topics that we've covered, or if there's a topic you'd like us to cover in a future video, please hit us up in the show notes or in the comments section. Thank you very much and have a great day.